Hi, welcome back to another edition of Lipper's Fund Flows Insight. My name is Tom Roseen. Thanks for joining me today. I'll be reporting flows for the week ended Wednesday, April 11th, 2018. I don't think anybody will be surprised if I tell them that we saw outflows this week. About $8.8 billion left the fund coffers. That's the first week in four that we've seen outflows. This is primarily a money market issue again, as it's been over the last couple of weeks. We didn't see a lot of movement in the equities or fixed income. We'll talk in detail about that. Basically, it was based on a bipolar trading week. We saw 4 out of the 5 days actually have triple digits up or down days. Again, I think one of the smaller moves on the days was like 250. We actually had one day that was under 100, but all the other days were actually big days. And really, this is to do on trade war concerns. Basically, we heard that the FBI actually raided President Trump's personal lawyer, and then also we've heard about the chemical tax in Syria, at least alleged chemical tax at this point, where I think they're saying up to 500 people were injured, and in the multiples of 50, 60, 70 people may have been killed from the gases as well. So people are very concerned by that. But the news is actually changing a bit because everybody's looking forward to a very bright Q1 2018 earnings season. And I think that is what's kept the markets up and down. If we take a look, the Dow Jones Industrial Average for the week, and Wednesday again was down about 0.31%, but on the flip side, the Russell 2000 basically saw an upside performance about 0.99%. So really kind of one of those bipolar weeks that people are going to be checking their portfolios on to see what happened. And I think most people will be pleasantly surprised that it worked out okay. Let's go ahead and take a look at our macro groups to see how this news panned out as far as flows go. Equity funds lost about $346 million this week. Taxable bond funds saw about $891 million enter their coffers. And then we go to the muni bond fund side, saw about $372 million in outflows. But the big story, as I was saying, when we saw some outflows, they made up 8.8, so obviously $9 billion in outflow from money market funds. Let's go ahead and take a detailed look at each of the macro groups to find out what happened in those groups. Let's take a look first at equity funds. Equity funds basically saw a 0.57% return for the week, so again, pretty good. Second consecutive week we've seen positive returns, but we saw outflows, $346 million. Third consecutive week we've seen outflows, and the story continues. Basically, domestic equity funds saw about $1.6 billion in outflows. Seventh consecutive week they've seen outflows. And then if we take a look at the non-domestic equity funds, they saw about $1.2 billion in inflows. Fourth consecutive week they've taken in money. Second consecutive week, though, for both of them that we've seen positive returns. If we take a look at the domestic equity, about 0.27%. And then if we take a look at the non-domestic equity, we saw about 1.10% return. Now, if we break this down a little bit further, large cap funds saw about $741 million in outflows. And then if we take a look, international equity funds, it's kind of been the story for the last several weeks. I actually saw inflows about $1 billion. So nice story there. Let's go ahead and take a look now and take a look at the equity ETFs to see what happened in that neighborhood. For the first week in four, basically we saw inflows, $6.1 billion this week. SPY was at the top of the charts, $2.9 billion in inflows, followed by the iShares Russell 2000, which saw about $877 million. If we take a look at the bottom of the barrel, we saw that the Consumer Staples Select Sector Spider Fund basically saw about $661 billion in outflows, million dollars in outflows, and the iShares MSCI EFA ETF saw about $642 million in outflows. So not a real big story there, but again, authorized participants, those guys that are actually injecting money into ETFs, basically are becoming a little bit more sanguine with the picture of what the earnings season might be, and I think they're making bets on the equity side for that purpose. Let's go ahead now and take a look at our fixed income arena and see what happened there on flows. Fixed income funds for the first week in three saw inflows, $891 million, and it's the second consecutive week that they've had plus side returns, 0.28%. The big group snatching most of the money was the corporate investment grade debt fund, saw about $632 million. Not a lot to write home about, but again, one of those mixed weeks. Sixth consecutive week that they've actually seen net inflows into that group. And international global debt funds also saw about $267 million in inflows there. At the bottom of the barrel, we saw that the balanced funds lost about $135 million, and government mortgage funds lost about $81 million. Now let's turn our attention towards fixed income ETFs, and we see a little bit of the same story as far as inflows, but this was a big inflow week, $5.6 billion coming into their group. Third consecutive week they've taken in money. At the top of the group, we saw the iShares Short Treasury Bond ETF taking about $1 billion, and the iShares iBox Dollar Investment Grade Corporate Bond Fund saw about $878 million at the very bottom of the barrel. We see the Spider Bloomberg Barclay Short-Term High Yield Bond Fund lose about $255 million. Now let's turn our attention to muni bond funds. We saw about $372 million leave their coffers. Second consecutive week they've seen outflows, but it's the third consecutive week they've had plus side returns. This week they put on about a 0.12% show as far as returns go. The big loser was the short muni debt funds. It saw about $235 million in outflow, and high yield muni debt funds took in about 130. Everything else in between actually made out the outflows of $372 million. Well, let's go ahead now and take a look at our last group. That'll be money market funds. And again, as I told you, money market funds saw outflows this time to the tune of about $9 billion. It's the first week in 3 that they've seen outflows. And if we break it out, taxable money market funds saw about $7.9 billion in outflows. And how it was broken out, institutional investors took out about $5.2 billion, while the retail investor took out about $2.7 billion. But the tax-exempt money market funds, I believe it's for the 7th consecutive week, seen outflows, $1.1 billion this week as investors are adjusting their money market exposure to tax-exempt bonds. All right, well, basically that is the end of the program for today. Basically, we're going to keep an eye on three things. So obviously, we have the earnings season coming up. That's a very important issue. And again, I think many people are looking at it as probably being a very good earnings season. With tax bills kind of working through, people are going to have hopefully better guidance for us as well. But they are going to keep a very close eye on the trade talks and then also on the issue of Syria. And those will keep everybody pretty much glued to their televisions until we start getting into a good flow of the earnings season. Well, if I haven't done a deep enough dive for you and you would like to do a deeper dive into a classification or a group that I haven't covered, you can go to www.lipperusfundflows.com, or you can join us next week where one of our analysts will talk to you about the flows trends of the week.